I'm speaking to Gottfried Leibbrandt, CEO of Swift, and we're here at the Swift Business Forum in London. And you just came off a panel talking about sort of the massive amount of global regulations affecting the banking world right now. And you talked about that there were three main peaks of regulations affecting banks. What are those peaks, and what is the peak that's sort of most taking up a lot of the time and budgets from banks?
Well, there's a lot of talk about the twin peak model, with the first peak being prudential oversight, capital requirements, and making sure the system doesn't blow up. The second peak being don't take advantage of your customers, all the conduct authority. And there's almost a third little peak, which is everything around not helping the bad guys. So that's taxes, KYC, AML, sanctions, etc. And what we see is that that third peak drives a lot of operational costs. If you talk about operational compliance, a lot of that is driven by that third peak. And that is an area where cooperation, collaboration could help syndicate some of these costs and share them among banks. And banks should not be all having their own KYC repository or their own sanctions checking. There may be areas there for cooperation.
Yeah, there was a lot of talk about collaboration on the panel. So, banks as global police, so it's sort of this collaborative police model you're looking at.
That's right, in terms of sharing some of that operational burden, absolutely.
There was also a question from the audience about new bank entrants into the banking world, into the payments infrastructure, into the banking world, and sort of the shock of hitting the regulations that banks have been subject to. And you made a point that, of course, they're subject to the same. How is that going to change in the future? Do you think regulations are going to become more liberal to let these entrants in, or will they just have to sort of bite the bullet and be subject to the same rules that the traditional banks are?
I don't know. I think regulators are sometimes oscillating between the two. On the one hand, they like to foster competition and sometimes are easing the burden on new entrants. At the same time, we're seeing lots of examples where new players are being taken to task to the same regulations that are affecting the established players. And I gave two examples in the panel. One was Chris Skinner's blog on his experience with the Postal International Payments Service, where he had to fill in all these KYC requirement forms, and that is...
You also talked about the PayPal incident as well.
The other one was PayPal, who had to disconnect a UK merchant who had a campaign on Cuban coffee beans, which didn't fly well with the US regulator, I suppose, so they took the UK merchant off. So those are two examples where you see new entrants facing some of the same compliance that established players have. And for regulators, I assume it is a trade-off between fostering competition and, on the other hand, sort of having these regulations apply to everybody.
So this week is the 40th anniversary of Swift, of the foundation of Swift. What does this mean, 40 years of Swift in the industry, and where are we going to see under your leadership in the next few years?
Well, I'm not going to look ahead at the next 40 years, but for us, it's something we celebrate. 40 years, we were founded 40 years ago. I think we've been tremendously successful in helping the industry really lower the cost of international transactions by providing a very secure and reliable platform and returning a lot of the profits of that to the community in the form of much lower prices and better services, if you will. And I think that is the direction we keep going, sticking to what we're good at, which is making sure we provide a reliable and secure platform to everybody, making sure we develop services that really comply to their needs, and returning the profits that we make in the form of lower prices and returning that to our owners and shareholders, which are the banks that use us.
Thank you very much.